The stakes have never been higher. Tomorrow's CPI report could literally change the course of our portfolios for the remainder of the year. So I wanted to take you through literally the good, the bad, and the ugly, and show you what we need to be watching for core CPI, what it could do to our accounts based on the read, but more importantly, how to react to it. How do we protect our portfolios? How do we trade it? So let's go through all of that, and you will be much better prepared for whatever is going to happen tomorrow, come rain or shine. Let's talk about the particulars. Federal Reserve Chair Jerome Powell has emphasized for quite some time that favorable inflation data would be critical for a September rate cut. So let's talk about what a good CPI number would look like. A good CPI number would feature core CPI below 3.4 year over year and headline CPI of 3.1% or less. Such results would more than likely bolster the case for a rate cut that would drive stock prices higher. Additionally, a favorable CPI could drive the 10-year Treasury bill below 4.2%. That would weaken the dollar index, potentially boosting commodities like gold and more than likely Bitcoin. All right, let's talk about a bad CPI number. A bad CPI report would have core CPI at 3.4% or higher and headline CPI between 3.2 and 3.3%. That would signal only a minimal decline in inflation. If that were the case, then we could expect stocks to pull back a little, but they may end up recovering and trading flat for the day. Now, let's talk about ugly. So we have the good, the bad, and the ugly. An ugly CPI report would come in above 3.4% for core CPI, and we would look at headline CPI of over 3.3%. That would lead to a sharp market sell-off, and we could see stocks decline potentially 1% or more. If this were the case, Treasury yields might spike. This would be a significant challenge for the stock market. So you need to be prepared for that just in case. First thing I want to share with you is how to evaluate your favorite stock on TradingView. Right now I have Tesla pulled up, but what I want to bring your attention to is right here. This shows you the high and low of the day. So you may be very tempted in the morning, depending on what happens, to jump in and trade based on if this stock is up or down or your favorite stock is up or down. But I encourage you to wait for at least 45 minutes to an hour and a half until this has been fully stretched out. What happens is all the retail traders put their orders in the night before or before the market opens, and all these get filled early in the morning. So you will see spikes in action early in the morning. Well, our institutions, they typically wait until all those orders have processed and then they put in their orders. And so that's why you see so much movement in that first hour and a half. So I encourage you to just take a deep breath and wait until these tops and bottoms have been defined, and that way you can make better trading decisions on what you're going to do. So after you have decided which direction you're going to play the stock, either you're going to, if you have the stock, you're going to maybe sell covered calls on the stock if it's running high. If you don't have the stock and you have the cash, you're going to want to consider selling puts. Or if you're not interested in options at all, you may want to just start dollar cost averaging into a stock. So I'm going to show you how to do all of that so that you can be prepared and take a list tonight. Put together your list of your favorite stocks and what actions you may take as a result of if it spikes or if it retreats. So if the stock drops tomorrow and you've been wanting to purchase Tesla, then you would simply buy Tesla. But I want you to be more strategic than just buying it. You want to consider doing a limit order. And what you can do is you can look at the high and low for the day and adjust your limit pricing to the bottom quadrant of the day. And then just relax and wait and see if you get a fill. A lot of times you will get a fill, especially once we enter close to around the noon hour. Usually you will, if the stock has moved up and then back down. Remember, you want to go take a look at the high and low for the day. So if this was the day that I was going to put in my limit order, if we're in a bullish mode, which we are right now, I might go ahead and set my order right here in the middle, hoping to get it at a better price right now than it's trading at the top end of the band at 208. So I would hope to get it maybe right here at around the 202, 203 mark. And so that'll help you not rush to overpay for a stock in the excitement because these bands are defined and they are respected. It may not come all the way back down to 197, but typically at some point in the day, you will see it go back to the middle of its range. So if that's the case, I would go ahead and put my limit order in right here, maybe 203, and then you would make it good for the day. And then you could just review your order and set and wait. The same holds true if you want to sell your stock. Maybe you purchased Tesla much cheaper and you've been waiting for it to get to a certain amount so you could sell it. You would do sell Tesla, but then you would go look at the ranges and you would want to sell at the upper end of the range. Go ahead and set your limit order so that you can take advantage of getting the best possible price. Now let's take a stock that has fallen so you can get an idea of how this will work. If you want to sell a put on a stock, you would want to, one, confirm that it's a red day, and it is, and then you would go in and actually go to trade options. This is Chipotle. They had news about their CEO, and they lost their CEO that they liked, and he had done very well with the company. So now it's a red day. A lot of my students have been taking advantage of selling puts on Chipotle as a result of this. It's always good to sell puts on a red day, especially if the red day is something that over time will be corrected. And the way that you can react to that is you just go a little bit further out, allowing the stock to rebound from whatever news that made them red that day. So sell put, I would consider going out maybe on this one a little bit further, say to September 20th. If you're going to be selling monthly options, consider that third Friday. That's when all the institutions do their buying and selling. So you would do sell, put, and then you want to choose something that is going to give you about an 80% opportunity of winning that trade. So you scroll all the way down here to chance of profit, and you'd want to settle right in here, probably at about this $46 level, or you could look at the delta and go for a 0.2 delta, and it'll be about an 80% opportunity for you to win. Now, if you look at this, this is going to give you a $75 paycheck for putting up your money. In this case, you'd have to put up $4,680 to make this trade, and you will be compensated for that by the way of a premium. So here's how this would work. It looks like you'll be getting 80 cents a share, so it's 100 shares, so that would be $80. This shows you the max profit at your $80. The max loss shows is $4,600, but this can be misleading. This would only be the case if Chipotle went to zero by your expiration date, and that is unlikely. So I don't want you to panic when you see this. It will scare off a lot of new traders if you see this. But here's how you would do your order. You're going to do a one contract if you're interested in 100 shares. You would be committing to buying these shares if by your expiration date, which is 38 days from now, Chipotle was at your strike price or lower. Now, let's go back to our Tesla example, because let's say you want to sell a covered call and your favorite stock, maybe it's Tesla, is running tomorrow, and you need to know, how can I take advantage of this? Well, the way you would do that, you'd want to confirm that it's a green day, and then you would go to trade Tesla options. You would go to sell call. Now, let me tell you, when you're selling a call, I do not like to go very far out, because if this stock starts running, you want to have the advantage of either rebuying it or rolling your trade. And so if you go too far out, you'll lose that opportunity and you'll be chasing the trade. So in this scenario, let's go down. Let's see, we're really high up. Let's go down in price to where we are with Tesla. And let's say you want to make your expiration date till next week, which that's good. That's about 9 to 10 days away. And you want to go and look at the same type chance of profit. And I like covered calls because as long as you are selling it above your cost basis, you can't lose on the trade. Now, you can leave money on the table. That's different. But that's where a roll of a trade might come in. And so if you want to look at this, let's say that we put 220 in here as our opportunity, and we're willing to give up our Tesla shares at 220. Well, if you bought them recently at 200, this would be quite the profit. For that, for the agreeing to give up your shares, you're going to be compensated $2.17 a share. So that's pretty aggressive. So you would want to, in this scenario, you would want to do a covered call, and then this shows you how the trade's going to work. you would receive $218. However, be aware that if we get to your expiration date, then your shares could be called away if Tesla is $220 or higher. If not, then you'll just keep that premium. You'll keep that $219. Now it's $221. It's fast moving. And you would have your shares, you would retain them and be able to sell covered calls in the next week. But if your shares are called away, you chose a good strike price, so more than likely you could set you a limit order to buy them back at $220 if, let's say, they were called away at $220 and the stock had risen to $225. And these are wonderful opportunities for you to make money either way, whether the stock goes up or the stock goes down. And I just wanted you to be prepared. So hopefully you can study this tonight and be ready to strike tomorrow. If you are interested in joining my trading community, I am taking applications. All you have to do is click the link below, and then you'll fill out a brief survey. We'll set you up with a call, do an interview to see if you're a good fit for our community. And if so, you could be trading with us as early as next week.